my colleagues and my friends. First, Mr. Naval Gund from UK. He is the chairman of Mindfit Limited.
Hello, everybody. Looking forward to today's session.
Second, Ms. Kanchan Verma. She is the CEO of Akulmach Technologies. She joins us from India.
Hello, everybody.
Third, Ms. Farida Charania. She is the CEO of Career Zoom, and she joins us from Singapore.
Hello, everyone. Looking forward to this session.
And so, welcome all of you. And I want to basically start the ball rolling by connecting with the previous CEO roundtable where we discussed about the elevator pitch. And today we want to touch upon these little nugget of doing business for chief executives. But we want to drive our discussion today towards the investor pitch. So, without further ado, let me invite Farida. What is the difference between an elevator pitch and how investor pitch is very similar to an elevator pitch? You can throw some light on that.
Yes, thank you, CK. So, firstly, let me just kind of, bring back some memory. So, people who have watched the last session, we talked about the elevator pitch where we had some very interesting discussion and some interesting ideas. I'm just going to talk about a little bit of a précis on what an elevator pitch is. An elevator pitch is basically a very, very quick, information about what you do and how you want to engage the party who's listening to you. So I would basically divide it in three, statements or rather three questions. And the pitch should not be more than about 30 seconds. So we are basically trying to say, who is your customer? What is their problem? And what do you do that solves their problem? So that's my definition of an elevator pitch, and it's worked very well for me in the last few years. So this is something I like to share. Now, when we come to an investor pitch, there is temptation to talk about everything that you are doing because you are so proud that you've actually reached where you are today, and you think they need to know what all have you done so that they can then further support you. But that is the biggest mistake that anyone can actually do, because as an investor I am only interested in a few things. I want to know what is the problem that you are talking about and trying to solve. What is your solution? What has been your traction so far? What are your markets and what is your total addressable market size? What are you trying to achieve from that? What is your business model? How are you making the money? Because if I'm investing, I want to know when I'll start getting back some money. So I want to know what is your business model. I want to know what is the team behind this entire exercise, what you have done or the product that you have developed. What is your vision? And finally, I want to know what you are asking. How much money do you need and how are you going to spend it? So that's all I'm interested in. So for an investor pitch, it has to be a very quick, maximum 10 slides where you tell the investor that this is the value proposition, this is their growth, and this is what you are trying to actually ask to make that growth happen. So this was my 2 cents and 20 years in a few minutes.
So, Farida, thank you very much for opening the debate. Now we can have an open house and leave it for comments from anyone. Deval, you want to go?
Yeah, sure. It's a great introduction, and as Farida says, her 20 cents over 20 years. It really is as simple as that. And I'm gonna go back to a phrase that I learned many years ago, probably last century, so over 20 years, and it was people buy from people. And whether you're in an elevator pitch, whether you're selling something to somebody else, whether you're trying to get an investor to invest in your passion, what you're really going to, you're looking for investment to drive your idea forward, people will buy from people. So they need to understand who you are. So they need to know who you are. They need to trust you. And in many respects, an investor, certainly for the type of investor that we're talking about here, for a young entrepreneur, let's say, they need to like you. you need to have that dynamic personality that is going to sell your idea, without the investor actually having to get further involved than putting up a bit of money and introducing you to a few of their friends who might be, either potential investors down the line if you need more money, or clients that you're going to sell to. So, Farida says it quite simply. There is no complicated arena here. You don't have to have 100-page business plan to convince an investor you know what you're doing. You just need to get your message over in a fairly short period of time. In many respects around the world, you don't need a lot of money to start something off. But Farida mentioned one thing: it's traction. And traction means a lot of things to a lot of people, but basically it means, who have you sold it to already? Like anything else, if I have a product that I'm selling for $1 million and I know there's a healthy margin in there, I don't have to find many people to buy it. It might take me a few months to find one person, but if I found one person, the likelihood is I'll find another. If I've got a product selling for $1 and there's a healthy margin in there, to get the same profit level, I've got to sell it to 1 million people. So it's really quite simple, really. What have you got? Who wants it? And have you sold it? So those are the questions you need to answer before you even go any further. Because an investor really is an ordinary person and they just want to know, well, it's a great idea. Have you sold any? What do
Yes,
you think, Kanchan?
yes. Actually, I will take a few points from both of you. What I feel is that every story which any business person wants to have, it should present a quick and compelling story to get an investor. Apart of this, the revenue model has to be very sound to impress the investor. So these two aspects are good, and again. Uh, we should always be confident that our elevated pitch should be so confident that we should be aware that whatever we are presenting in front of the investor will get the success. So there are three major points which I feel is very, very important when we are and pursuing any investor in the company.
You see, now the discussion is really heating up. I would like to make a few points here. See, when we go around and talk to our colleagues, especially, I will just give reference to my interaction with them. Many of them don't know what they're looking for in the investor. That is the first challenge I have seen. And why I'm saying that, because they don't even know what type of investor they need for their organization or for their business. For example, there could be an angel investor, there could be a seed investor, there could be crowdfunding opportunity, or there could be a bank loan. So first off, people don't have that capability to do assessment of what kind of investors they need, how much money they need. In fact, Farida mentioned that you need to know how much, what is the ask. The ask can be only driven if you know what is your expense. And then based on that, you can make a elevator pitch. And for different type of investor, there has to be different elevator pitch. For example, if you think that your project can be funded by a crowd funding, then you have to go and totally make a different pitch, which attracts the crowd to fund your project. And in return, you will give them XYZ. So you need to know exactly, if somebody is giving me $10, what I'm going to give it back to him if your option is a crowdfunding. If you're looking for a seed investor, then you have a pitch which you have to basically, you're going to live with that investor for a couple of years, or 5 years, or 6 years. If you have an angel investor or a VC, then you have to offer them an exit plan. So while you're taking a money right now and you're giving them ask, for example, $2 million, within 2 years you should be ready to give them in your projection what is the exit plan for them, not for you, but for them. So I think these are the things that people should know upfront, what type of investor they are looking for. And obviously, you don't want your investor to break your legs if you're not able to pay. So you have to know exactly what you're getting into. I think these are certain confusions in the minds of the people, uh, especially when they're starting, some sort of an idea or an SME, or if they don't have an experience to look for an investor. I think I just make these points and really expect my colleagues to really heat up and take up these some of these challenges that people have.
Thank you, CK. I think this is getting interesting because all of us have a slightly different view as to how we look at it. I think this issue about what the ask is and people not knowing happens when people are trying to raise the pre-seed or the seed round, because after that it's a long grueling journey before you even get to your series A. And by then, as someone who is looking to raise that round, you're very seasoned. You already know what you should be doing, and they have met people like me who have trashed everything they have done and told them, okay, now put it in 10 slides and come back to me. So I think I would like to kind of, give some pointers to first time, entrepreneurs who are trying to raise money. And I have learned the hard way. I've been, kind of really got a tap on my knuckles because I have written like a 50-page pitch when I was raising my first round. And when I actually went to the investor, he was a very kind elderly man. He was 78 years old, and he actually sat me down and he said, "You know what? I really like you. If I didn't like you, I would have said, send it to me by email and I would have never have come back to you. But I really like you, so I like to give you some advice. I know you're very passionate about what you have done, but really this is of no value to me. I'm an investor. For me, the maths is very clear. I have to like you, I have to believe in your product, and I have to believe that it's going to make me money." So that's how I came up with this thing where we, again, I'm going to stress on the fact that you talk about, if you are in the very nascent stages, you've done your family and friends round, you've got an MVP, that's a minimum viable product. Now you are ready to get some external hands involved. Remember that a lot of these investors are sharks. When they actually give you 100,000, they expect a lot. So the thing is, it has to be very clear. And one of the easiest way to define your ask is that you have to have a projection for the next 3 years minimum, and understand what is it going. And you have to also know where you want to be and how you're going to get there. That will give you a clear idea as to how much you want to dilute in terms of your equity, or what is the money that you want to raise externally, because you will be diluting. That is something also to kind of make a note of. So if you're diluting, if you're going out and giving someone else the power to control x percentage of your company, then you need to be very clear what you're going to ask, how much money you need, and what are you going to do with that money, because the investor will want to know, are you using it for marketing, are you using it for your technology development, what are you going to do with that money. So have those things really, really clearly etched out in your plan, because the investor usually would ask you only for a one pager even before they decide to listen to you. And that one pager has to have these things very clearly. They can read in like 30-40 seconds and give you a chance to make a presentation and then answer their questions. So again, I would come back to the same thing, that be very, very clear. What is the problem you are solving? How are you solving? What is your traction so far? So who are the people who will use it, and who have you sold to? Because that's very important. It's not about the revenue, because you get into the MRR ARR kind of a game only when you reach series A. But before that, it's very important, has someone actually shown that kind of belief in your product and has bought it? And then what are again the markets where have you shown some traction and where you intend to actually enter, and what is it that you need for that? And Kanchan mentioned about the business model as well, and I'm going to reiterate that it's very important to at least know how you're going to do in 3 years. You need to have your plan A, plan B, plan C, and one, if everything else fails, what you're going to do. And then of course the team, because that's very important. Investors always look for a team. They'll ask you questions: are they full time?
Yes.
And that is just that is just so important, because a lot of entrepreneurs are actually working. They are in a job and they start a side hustle, and they think that because they have a brilliant idea they can raise the money. It's not that easy. So they will ask you this question, that how many of the people who are involved are full time. So you need to have that very, very clearly. And your vision is not so important to the investor, but it's important for you, because you need to know where you want to be and what is it that you're trying to do. Yeah. And then all of this will bring you to your ask. So okay, I need 1 million to for the next 16 to 18 months to actually do this. And you need to be very clear, because they are going to ask you every penny that you spend as to how you've spent it, because you are actually answerable to that. So, and I can't stop talking enough about this, because in my consulting work I come across first time entrepreneurs who again write stories. I say I love reading. This is my bedtime reading, but unfortunately, this is not going to get you the investment.
So I'll just add few points. I fully agree with the all points which Farida is talking. So I think the financial production is very, very necessary. A part of this, it's also very necessary how much we need. So don't go overboard when we are really looking for investors. And then I think you have to be honest and you have to be clear about your goals, and you have to be very clear what you want to achieve out of this investment. So these are few very final and important points when we look towards elevated pitch for investors.
No, it's really important to know where you're going, because again, that's the investor's going to be investing their grandchildren's money. I mean, that's where you need to start to think. It's not money that they've got spare typically. It's money that they're looking to invest. And they're not investing for their future. They're investing for their family's future. A lot of these people. I mean, Farida mentioned sharks. So there are lots of sharks out there. There's shark-infested waters when you walk into the investment community. But there are lots of investors that want to believe in you. And one of the things that I find a bit surprising, really, for a startup is they've not apart from time, they've not invested anything else in what they've done. So they haven't gone into their savings. They haven't literally remortgaged what asset they have. And yet they're going to an investor and they're asking an investor to do that thing. So one of the first things an investor is going to ask you is, how much skin in the game have you got?
Absolutely.
Is it 3 months of your life that you've put into this? Well, congratulations, we all do that. Any parent raising a child knows that they put a lot of effort into raising the child, but they don't look at that as an investment in themselves. It's an investment in the child. So this is your baby. So what have you invested into it? Where is the income that you've generated from it, assuming you have? Because if you haven't generated any income, don't look for investment, because people won't invest. They'll just say it's a great idea, but you've not sold anything. How do we know that people want it? More importantly, how do we know that you can sell it? And this is about your limitations, where you've come from. Because believe you me, whether you're an employee or an entrepreneur, you are a salesperson. You need to be selling yourself, selling your product, selling your service. And a lot of people don't understand that. They just think, oh, entrepreneurship, that's easy. I'll just get someone to fund it for me. Well, you're the primary source of funding. And with a lot of startups, we're here, we could be talking of $100,000, $1 million. But what about if you need $10,000? Well, there's something called a bank. And if you can go and make a proposal to a bank, and the nice thing about going to a bank is they don't tell anybody else. So if you go and pitch to a bunch of entrepreneurs, a bunch of investors, and none of them take it up, they'll all talk about you and they'll impact another lot of investors. But the great thing about a bank is they'll ask you for everything we've been saying. But banks don't have to like you. They have to see what's going to be, where is the hard cash? Can I see a return on investment? And let's face it, actually, a bank is the cheapest form of borrowing currently because interest rates around the world are at an all-time low. I mean, in the UK, we're looking at about 4 or 5%. So if you're borrowing $10,000, you're only having to pay back in the first year $400. Now, that isn't a tremendous amount of money, and you've got the working capital, therefore, of $10,000. And if you've got a projection, as Kenshin and Farida were saying, you will see where that $10,000 can be best spent. And the nice thing about that is, once you've paid the loan back at this fixed interest rate, there's no more payment to make. You keep 100% of the equity of your organization. Now, that has to be attractive. So if you are a young person looking to start up, look at the bank. And the second thing is, if you can't get the bank to invest in you because you've got no assets, think about your parents, your friends, your acquaintances, your aunts and uncles, your grandparents, because they want you to succeed as well. And if you can get that seed funding, as Farida said, it's that initial seed, you can then prove you've got a business, then you can go for the $100,000 or the $1 million. Proving a track record to somebody that says, yes, I trust you now. You're quite clearly an entrepreneur. You know where you're going. You made a few mistakes along the way. Your projection wasn't quite what you expected, but it could be beyond your expectations, or you didn't quite get there. But now you've got skin in the game. And that's where people miss out a lot, I think. They don't have enough skin in the game. So, any additional thoughts on that, Chandra? Because you've seen people with no skin in the game expecting investors to come and just cough up $100,000, haven't you?
Yeah, well, in fact, I want to channelize this discussion in that direction which you want to go exactly. And my 2 cents on this is that you may have a very good idea. You are a young entrepreneur, you have a fantastic idea, and you may have figured out that maybe 10,000 customers are waiting to buy that idea. But if you don't have money, don't get into it. My simple 2 cents advice is if you don't have money, don't start anything. First, get the funds mobilized, either through crowdfunding, as Nebu said, get your relatives to invest in you. If they have trust in you, they will invest in you. And if you are able to build your trust factor within your family, that is a good benchmark, because if you can convince your nears and dears and then take the next step, convince the bank, take a short-term borrowing, have a fixed monthly installment, which you can pay easily. And the next step would be to go to an angel investor who will then like the idea that you've got 100 clients, your projection is 10,000 clients, but now you're able to convert 100 clients, and the angel investor is willing to invest and willing to live with you for 5 years or 6 years. That means he's a long-term player. He will give you $1 million. And then you take it to the next level of 10,000 customers. That is your original idea. And once you have got that, then you go to a venture capitalist, because venture capitalists, as we have said today, sharks or killer whales. So they will not have patience to stick around with a company for more than 2 years. So they can give you funding of 5 million or 10 million or 20 million, so that you can take your initial 10,000 clients to 100,000 clients. And that is where you need funding. And usually venture capitalists will come and fund you in large dollar numbers. So I think it's a stepping stone. First thing, get your near and dear to invest in you. Go to a bank, get your loans set up, then go to a angel investor, and then go to a VC. I think that is a step. But if you don't have any of that, I mean, if you don't have a crowdfunding, successful crowdfunding within your family, then don't get into any business because you will not succeed. That is my 2 cents on it.
So everybody was talking about do's and don'ts to get the investor for your business. But I would like to tell you that in case if you have planned to really go for investors help, so you should how you should approach. The first is that you should be clear what the product line you are and service line you want to get money for from the investor. A part of this, you should be very clear. The pitch should not be more than 10 minutes. I guess that explains everything. A part of this, you have to know what are your audience, what the strength of your team, and then you should also be very clear about the exit plans once it doesn't work out. So these are few final points if you decide to go for investors help.
I like to pick up from Kanchan's point about exit. We may not like it, but that's something like when I was saying you have to have a plan. A plan A, B, C has failed. What next? Like mine was, I'll start writing my resume. But it's just the thing is that you need to know what you're going to do because your exit has to be very clear, and that's a question that the investor is also going to ask. They are going to ask you that once you've built a sizable business, what is your exit strategy? There are some people who build companies to run the companies, to build the business. There are some who build companies to sell. So that is also a key, that you need to be very clear what you're going to do in 5 years, 10 years time. Ultimately, the investor wants to see that, as an entrepreneur, you are a good leader. So, someone who knows the way, goes the way, and shows the way. That's how I would put it, because they are very interested in knowing that when the company is not going to go through the same kind of times all the time. Business is going to go up, down, and it's never going to be like in one stable pace. So how are you going to deal with all of those challenges? And this is not part of your investor pitch. This is part of the Q&A, because they are going to ask you these questions as well. So it's important to be prepared for these questions as well. You will actually get rap on your knuckles for first few times, because nobody can be prepared well enough. I have done this now for almost 7 years, and I have got shot down so many times, but I have learned the hard way. And I'm hoping to share this with the audience, that it will give you some value. Uh, you make your own mistakes, make new mistakes, but we have already made some mistakes, and we are sharing with you so you don't at least make the same mistakes.
Exactly. And I think something that we're all alluding to here is things will evolve over time. So when you're starting up a business, there's a specific skill set you need to get that business moving. As you move into past the real entrepreneurial risk-taking arena, you need to be moving into stability. And the skill set for that stability section, not that growth isn't still happening, of course growth will happen, but you're stabilizing what you've currently got. The team dynamics need to change. You need to bring in other people, other expertise that can help you stabilize what you've got, at the same time build and grow, so that you're making your expectations come to fruition. But it's that skill set that you need to start to think of now. So you may be that one person, the idea creator. You may be able to sell it to other people. You could even get the investment very easily because it's a no-brainer. You know, everyone loves a no-brainer, but you may not be the best person to run it, because if you're like me, I get bored very easily when things start to just be mundane. I love starting new things, but once it becomes mundane, I get bored. Other people need to take it on. So you need to work out exactly who you are and who are the other members of your team, the dynamics of the team moving forward. So that should be in your planning too. And the thing is, we talked a little bit about exit. Every investor wants an exit, whether it's a year down the line, 2 years down the line, 3 years down the line. They ask for the exit is because they want to know how, when things don't happen, like COVID, you know, if you were to have opened a restaurant in January of this year, and in the UK, COVID hit about March, it hit Europe about February, March, you'd have been closed down within 6 weeks. What's your exit strategy? What's your ongoing strategy? Because no government could tell you when we're coming out of this environmental problem. So you need to have that resilience, and you need to know just exactly when's the right time to give up. You know, that's not to say you're a failure, because recognizing you need to give up is actually saying that's a success. Because I now need to either change my plans and adapt, or I need to just can it completely. And there's many examples of where organizations have not stopped. I mean, look at Kodak. You know, they were the only photography company in the world. And look what happened. They even designed a digital division, but they decided, no, that wasn't the way they wanted to go. And within 3 years, the company didn't exist. It physically didn't exist. They couldn't pay their loans. It went completely bankrupt. And now look at it. It's coming back again. Guess what? With a digital presence. So there's a time and a place for everything. But the thing is, realize your own limitations, realize your own expectations. And as Farida said, she got her knuckles rapped a few times. But this is the hard knock world. You know, you can listen to this until you're blue in the face. The nice thing about this is you can go and listen to this video time and time and time again. But until you get in front of an investor, you really don't know what world you're walking into. So go and have fun. Go and experience it.
So, Naval, in fact, you talk very elaborately about the exit plan, what people need to do, how they need to orient themselves. So, I would like to give one idea. The idea is could be very valuable for the young entrepreneurs. Uh, See, when they approach investor, they have to offer them an exit strategy. Like Farida said, Kanchan said, and you also, Naval, you said that there has to be an exit strategy. In the first place, why they want to enter? I think that is the biggest question. As a entrepreneur, you have to present what is the game that you're offering so that they can make money for a year or two and they can exit. So I think these are the things that people have to think about. And to throw an idea here is, if investor has say $1 billion fund with him and he wants to invest say 5% in you because he likes you, like Farida mentioned, the investor liked her a lot, but he didn't like the way the projections were being made. So he may like you. That is the first point where they start talking to you. But as an entrepreneur, when you want to offer them something, you have to offer them 2x that a bank is offering them. For example, if they put $1 million in the bank account, they will get 10% interest rate easily. So if you approach them, hey, don't put your money in bank, put in my business, and I need half a million for this, and I will give you return of 2x. And that is when they get attracted to it, and then they start asking you question, hey, how are you projecting 2x? So I think the first point is, before you even approach an investor, you should have a strategy in your own mind that how you are going to make 3 to 4x, or if you have $500,000 with you, or X amount of money with you, so that you can keep 2x and you can give your investor 2x. And if you don't have that, please go back on the drawing board, make your business plans properly so that you start achieving that. So I think that's one trick I would like to offer from myself.
No, that's an excellent one. And the interesting thing is, you've sparked some thought in my mind about what's the difference between a bank and an investor. And you just mentioned it. It's literally the investor actually is investing in you. You're the only asset. There is no other asset that you can put up that the investor can snatch afterwards if the company doesn't succeed. However, a banker is looking at collateral, and that collateral has to be hard cash in some form, bricks and mortar, deeds, some shares, whatever it's going to be in other listed companies. So something that's tangible that they can get their hands on if indeed that investment doesn't succeed. So therefore, they're looking at a lower return because they've got an asset that they can fall back to. So that, in many respects, that's the reason why I say is put skin in the game, go to friends, family, and other people might say fools, but forget the fools. It's friends and family that you need to go to invest in you because it's your idea. It's a fascinating discussion, everybody. I mean, we could go on forever giving people great advice here, but it's the simple bit. You need to go out and practice it yourself. If this is something for you, don't just dream about it, go and do it. Go and pitch to other people and see whether or not you've got an idea that has value in someone else's mind. Because that's the whole point here. It's not value in your mind, it's the value in somebody else's mind, whether that's a buyer or an investor. It's called about what does it mean to them.
Absolutely. In fact, as Neville said, we can go on. There are several other ideas. Farida, Kanchan, they have all put their skin in the game. They have gone to investors. Myself, I've done that several times, and Neville obviously is the old hat. So if anyone watching this video needs any help from any one of us, can reach out to us, and we can put the right person in touch with you, or you can reach out individually to all the panelists that we are in the show today. So with that, I'd like to thank Naval, Kanchan, and Freda. Thank you for coming and discussing few points from your experience. I am sure there are a lot to it, which given the time, we can discuss more. But for today, I think we will end our discussion here.
Bye, everybody.
Bye.
Go and enjoy.
Thank you very much for sharing your time with us. If there are any topics that you'd like us to cover, let us know. And everyone have a fantastic weekend ahead. See you next week.
Bye bye.
Bye bye.
Bye for now.